Nvidia stock is up over 70% in the last 3 months. It's the hottest stock at the center of the AI revolution. The latest headlines about the lifting of chip sale bans to China have only sustained this eye-popping momentum. Even more shocking, the company crossed a $4 trillion market cap. That makes Apple and Microsoft look like small potatoes. To put this in perspective, here are some of the largest companies throughout history adjusted to the modern day value. Now, even if you believe AI will bring about massive technological efficiencies and a paradigm shift revolution for society, as long-term investors, we have to ask, does the quality justify this hype? What are we getting out in exchange for an ownership slice of the business? And given the levels of valuation, does it make sense as a buying opportunity? As long-term investors, we don't care about what is going on in the nonsense news. We're not trying to predict the future of macroeconomic trends. Instead, we want to look at business fundamentals and understand how can we quantify this question of does the quality justify the hype for Nvidia? So here's a plot of the ROIC shown in blue over time, going back 10 years, and the cost of capital shown in orange. A company with a high ROIC can take the capital that it raises, debt and equity, and put it to work, getting a high return. And when that return is much higher than the cost of capital, the business is creating long-term value. We see Nvidia's ROIC has been peaking. So quality by this metric is the highest it's ever been, over 90% as of last quarter, compared to an 11% cost of capital. This is a high-quality business no matter how you slice it. Looking at other metrics like growth, Nvidia is clearly running away. So the hype is palpable, and we could see why. But let's take a look at value. Is this quality justified by the current valuation? And so what we're looking at here is the hype factor in green and the equilibrium hype in pink. And we see the hype factor has peaked up to a very high multiple, over 35x, now cooling off a bit to 22x. That's still a massive hype factor. It's way above equilibrium, way above the long-term average. And so we are in uncharted territory here. But we have a high-quality business that's also at very high historical hype levels. So how can we compare them? Well, we can put these two metrics together and form a ratio. It's called the value creation yield, and we can take the ROIC, 91%, divided by the hype factor, 22, to get a value creation yield of 4.1%. So this is a way of combining these two quality and value metrics to answer the question, does quality justify the hype? So what does this mean? The value creation yield tells us how much we as shareholders and debt holders are getting out of the business in terms of profits compared to what it costs to control the invested capital that generates that profit in the first place. So let's put this together. We have hype at historical extremes. That's the fight against market gravity forces that pull it down from these stratospheric hype levels. That means competition. That means the hype bubble popping, the paper hands who want to get out and sell. It means Nvidia not being able to meet those growth expectations and a realization coming from the market. At the same time, ROIC is 91%. That's difficult, if not impossible, to maintain over the long run, again, for reasons of competition and reaching limitations of growth as you scale to this level. Yet a 4.1% value creation yield is not exactly as eye-popping as the headlines make it sound. So what are we really betting on? We're betting that Nvidia will continue peak performance and yet produce a 4.1% yield. If we look throughout history, market gravity tells a different story and always pulls us back down to earth. Just look at the list of those large market cap companies throughout history. Let's consider it another way by looking at the PE ratio. So Nvidia has a 55 PE ratio compared to the S&P 500 index, which has a 27 ratio. So that means Nvidia has to 2x its earnings, double its profits, while the price stays flat, just to bring it in line with the index. Can Nvidia do this? And more importantly, can Nvidia do this on a time scale to satisfy the hyped investors that are still buying in at these current valuations? So despite the undeniable technological impact that AI will have, and indeed is already having on our world, as long-term investors, we need to ask, does the quality justify the hype? What are we getting out in exchange for what we're putting in to own a slice of the business? And what do the current market valuation levels already mean in terms of what hyped investors have baked into the price? How does that compare with the quality? Now, none of this means that Nvidia will pop in a massive tech bubble like we've seen in the past. Instead, it could mean slower growth going forward because the market is realizing that Nvidia cannot keep up with hyped expectations on growth. Remember, no one can predict the future, especially in the short term, but by looking at these long-term trends, we can understand business fundamentals through key quality, value, and growth metrics that can help us avoid the nonsense news and invest for the long term.